I'm David Mandy, president of O&M Partners in New York. I want to welcome everyone today to the Seabridge Gold Town Hall call. For your background information, Seabridge trades on the TSX under the symbol SEA and also on the New York Stock Exchange under the symbol SA. For you, those of you that are new to the O&M broadcasts, I just wanted you to give you a quick background. We're domiciled in New York. We're in the business of bringing public companies and investors together in real time on a non-deal basis. We're not commissioned. We're a marketing firm. I started my career in advertising. I'm a former copywriter. So the information presented today is publicly available. We're hoping that this broadcast will bring this information to your awareness or provide further context for you. And we're hoping that you'll come away informed to make a wiser investment. Really appreciate your attendance here. Also want to add that we are answering questions from our audience. Please feel free to use the chat in function and text in your question. If we don't have time to answer your question, we'll get back to you as soon as possible after the call. Before we turn to our host today, Rudy Frank, we're going to start with a discussion about the category of mining by someone and gold mining in particular, someone that I've worked with since the beginning of my career in bringing companies to the buy side. We have pleased to have Doug Loud today, Executive Director of Greystone Asset Management. He also is now also working with O&M Partners on a consulting basis. He has been involved in exploration production companies, silver, gold, copper, plus some medical technology companies. He has extensive experience with option trading, also foreign securities. He's a co-leader of training seminars for interns and other reviewing the application of to current financial markets and also looking how to decide whether or not things are really what they appear to be. On that note, I'm going to turn the call over to Doug.
Thank you, David. I've been asked to talk about what my partner and I look for when we're looking at mining stocks in particular and what things are important. And since this is sort of the first one of these calls, I'm also going to stress the most important things we look for off the bat. You can get really involved in one of these conversations only to discover that if you don't care about this project at all. So we're going to take that sort of point of view and then build out from there. Now, one of the questions that I often get is, well, why should I buy a mining stock at all? Why don't I buy gold bars or coins? And the answer is, you can buy gold bars and coins. Just be aware you're not going to sell them in all likelihood as easily as you bought them, and you're locked into the price of gold. It either goes up or it goes down or it stays steady, but the coins themselves, unless they're very rare, aren't going to increase in value, nor are the bars. And oh, by the way, you have to keep them somewhere to keep them safe. Another question we get is, well, why should I buy a stock instead of one of these mining ETFs? My view on that is kind of like, if I'm going to be exposed to this sort of a situation, I want to have done my own homework and bought into a project I understand and I care about. The ETF is buying a group of stocks or an index of stocks and buying and selling them as their prices go up and down, and you don't have a lot of control over that. Now, if we're going to look at mining companies, one of the first things you have to remember is the famous joke about Mark Twain, who apparently said that a mine is a hole in the ground with a liar standing next to it. What people often leave out is that the legend goes on to say that the reason Mark Twain said there was a liar standing next to the mine was because he was the liar. He was a newspaper reporter and he'd been sent out to write up these various people who were doing the mining, but they were sort of boring. So he made the mines themselves sound exciting. Another thing you want to keep in mind as you look at these different mining companies and their projects is that there's a lot of companies in this space. And you want to hear as many discussions about these companies, these presentations, as you can. You will always learn something if you attend these kinds of presentations. It may not be what you expected to learn, but you will always learn. And furthermore, the more presentations you hear, the more you'll be able to evaluate for yourself whether these are a project you wish to get involved in. Now let's talk about mining companies. There's really two big kinds. There's the majors and the juniors. Majors are gigantic companies that are mining huge projects and have basically spun off all their, shall we say, research and development projects to people known as the juniors, which are little mining companies. Actually, a little mining company is much bigger than most regular companies, but be that as it may. And the majors' idea is that the juniors will spend all this investment money exploring the project, and if they find something, they'll get it de-risked, which means they'll get a lot of surveys and studies done. And then the major can come in and buy the little guy or buy his project later, and they won't have had to spend a lot of their time and money doing this kind of work. And the reason they're doing this is that they are eating themselves alive. The majors are basically mining the metals out of the ground. They're taking them out of the ground. So they have to have more metal. So they have to count on the junior miners to find those metals for them. Within the world of the junior miners, who we spend a lot of time with, there are basically three kinds: explorers, developers, and producers. Now, the explorers are the guys with all the romance. They go out, they find something fabulous, they research it, they drill it, they get a lot of studies that we'll talk about done, and finally, the day comes when they file for all their permits, which can take a long time, and then they become a developer. A developer is somebody who is building the mine. That can be a long and complex project, and believe it or not, you can get all the way to the end, the mine is all built, and it doesn't work right, or the process doesn't work right. Ultimately, though, if all goes well, you get to be a producer. Now, be aware of this. It can take 10 years, easily 10 years, from the day an explorer finds that first magic piece of rock with the gold or the silver or whatever in it, through all of this until that first day that the producer produces a drop of new metal. It's a long, complex process. That's the bad news. The good news is if you make the kind of money that people think they can make in this business, you're going to want to have long-term capital gains treatment, which is at least these days a year. So therefore, holding onto these stocks and just riding with them is what you're going to have to do. Another thing, this is, if you learn nothing else in this call, this is the one thing to remember. The minute the presenter starts to talk, you want that person to tell you what they're mining and where it is. This is vitally important. You can spend a lot of time in presentations only to discover the what and the where are very wrong for you. Let's start out with the what. In this case, what metals? Gold or silver or copper? Is it diamonds? What is it? Mostly we're going to talk about gold and silver and copper. Be aware that gold and silver and gold and copper often come together. Where is the mine? For example, if they tell me they're mining cobalt, which gets very exciting periodically, but they're mining it in the Democratic Republic of the Congo, that's what we call country risk. There are terrorism risks. There are political risks. So one of the things that we want to deal with is country risk. For a while, a wonderful company with fabulous projects in it called Burkina Faso was doing great. Then they had sort of a military realignment in the government, and a lot of people aren't so sure they want to go back there at this time, even though the projects that they have are wonderful. Another thing you're going to hear people talk about is, well, gee, what is the status of your permits? In our office, the running joke is there are no mining projects, there are only permitting projects. Why? Because in order to do the mining, in order to do the drilling, you need permits from various government agencies. I could spend an hour just on the agencies and some of the permitting. But there are all sorts of environmental permits, special permissions to drill permits, what kind of land you're drilling on. Is it, Bureau of Land Management, which is a federal government agency? Is it a Mexican family cartel of properties? You run into all sorts of issues. So you want to know what the permit risk is. And very often you'll hear that, well, they're all set to go and they're now doing the environmental studies, and those will take a year. And then there'll be all the rest of the permitting document funding, and that'll take another 2 or 3 years. Don't be surprised. That is par for the course. You'll also hear people talk about, well, gee, how much cash have you got on the balance sheet and what is your burn rate? In the good old days, so to speak, these companies would come to market every 3 months to raise more money. They can't do that anymore. So one of the things that you always want to know is, well, do they have any cash to keep going and to do the drilling that they're telling you they're going to drill while they continue to explore? And their burn rate, which is basically how much are they spending a month to run the company. So if they have $10 million, but they have a burn rate of $1 million, and they really only have 10 months of cash, and probably really not that period of time. Ore is, by definition, metal-bearing material that can be mined, stress, at a profit. People forget that, and they get all excited about how much ore is going to be mined, when in reality, the geologists have found a lot of ore to mine, but it can't be mined or won't be mined because it can't be mined at a profit. The explorers will come and they'll tell you that when they get all done, you'll hear questions about, well, what kind of mine will it be? This will affect those permits we talked about. It'll probably be either open pit or underground, or later on at the bottom of the pit, they'll go underground to continue mining down in the ground. We touched briefly on ore, but you'll hear about things called reserves in a 43-101. Reserves are, well, okay, they've done a lot of drilling to find out where the metal is. How much do they think they have? And they'll tell you. However, a while back, the Canadians came up with a way of this thing. Well, wait a minute, how can we audit this to make sure you're telling the truth? And you'll hear people talk about a 43-101. Another thing you're going to hear about is the cutoff grade. Cutoff grade basically is, well, if we had, for the sake of argument, an open pit mine, we would mine it down to where the ore reaches a certain grade, say 2% copper or 2% gold. That's all well and good. But then when the price of gold goes up, they can decide, oh, well, we can lower our cutoff grade to maybe 1.5, and voila, the minute they do that, they now have vastly more ounces to produce than they had before, or so they say, and it sounds great. And they don't then cut it back when the price of gold goes down again. So that's one of the things we have to keep an eye on. Another, to get even more complicated, you'll hear people talk about something called cash cost and all-in cost. They'll say something to you like, oh, well, gee, it's really great. Our cash cost per ounce of gold is $600. That's sort of like, well, how much did it cost them to make that ounce of gold? Then they'll talk about all-in cost, which is really like, well, all the other expenses it takes to run the mine to find out how much each ounce is going to cost. So it's a bigger number. But another thing to keep an eye on, and why you want to pay attention, is it a gold and silver mine or a gold and copper mine or whatever, is that you announce, in effect, that you are a gold mine. If you find a lot of copper, all the money you get from the copper is then used as a credit against your costs. So for the sake of argument, you could have an $800 an ounce for gold actual cost, but then when you take into effect the revenues you're getting from the copper, surprise, your cost just went to $600. Another thing to keep an eye on. They're making a lot of money on both sides of it, but the way those calculations are done can be a little confusing. One thing that happens with the junior miners when the market starts to run is they start to just go up. They're finding more ounces, people get excited, the stocks start to go up, and they develop what's called momentum. The metals market's kind of like the tide. It comes in slowly, but it keeps on coming, and you have to pay attention to that. The other thing is that as more and more ounces are discovered, people get excited that, oh, well, this company might get bought. And you'll see a stock start to go from 50 cents to $1 to $2 as people get more and more excited. It gets to $3, now it can be bought on margin. More and more excitement happens, and you want to pay attention to that because at some point they're hoping the company will get eaten by one of the big companies. One of the reasons you want to find projects you like, buy them and hold them. Because when these mining companies swoop down and buy one of these little guys, it's like an announcement and bang, that stock is gone. You cannot go, oh, well, they're going to get bought, I'll buy it now. It's already over. You have to have already owned that stock when it gets taken out to be in that game. That's sort of coming to the end of today's sermon. Again, the one thing you want to pay attention to, the one thing you want to find out right away is what are they mining and where are they mining it? Because if it's the wrong metal for you or the wrong place for you, you need to know that so you don't waste your time. On that, it's been great talking to you. I hope I've been helpful. If you have any questions, please let me know. Thanks a lot.
Thank you, Doug, for giving us the generalist perspective, which of course is the basis for all of our knowledge. So thanks about mining. So thank you very much. It's a pleasure now to introduce our host today, Rudy Frank. Rudy is the co-founder, chairman, and chief executive officer of Seabridge Gold. And he's also was an early adopter of these town halls. Rudy has over 30 years of experience in the gold business. I guess that number has changed. It's probably 35 now. He was trained as a mining engineer at Columbia University when they still had a mining program. And prior to Seabridge, Rudy held senior management positions in several publicly traded companies. His experience is broad. He's built mines. He's been involved in every stage of project development. When he formed Seabridge in 1999, the mining industry had it backwards from Rudy's viewpoint. They were driven to convert gold and other metals to cash. Seabridge flipped it on its head and focused on converting cash into gold. Seabridge has more gold per common share. Excuse me, I just got interrupted here. Please hold me a second. I'm sorry, Rudy, I'm getting back to you. Seabridge has more gold per common share. I'm sorry, gang. I just got it. Than any company in the industry. The company's been driven by gold ownership, not cash ownership. We like to think of Seabridge as a below ground ETF. We've worked for Rudy since 2006 and can attest to the fact that Seabridge's story is always developing. The feedback from the marketing is that investors see Seabridge as the best leveraged company to rising gold prices, which is where we are today. Rudy inspires confidence. He can be trusted to continue to build shareholder value. He has a very tight capital structure. The dilution is minimal and is always kept to a minimum, especially compared to the growth of his reserves and his resources. Seabridge has an outstanding exploration record. The copper credits take the cost of gold to very low number. This is also a momentum story all through the bear market in gold. Rudy and his team diligently and frugally worked on improving the economics of its elephant reserves and resources to permitted reserves. And Seabridge is now at the top of their class in creating shareholder value. The stock is a wonderful call option in gold, and it's an honor to have Rudy speaking to you today. And a quick mea culpa, I'm the analog one in the group, and I seem to always be making mistakes with the computer, but I'm trying. Over to you, Rudy.
Hi, can you guys hear me okay? Maybe an organizer can.
Okay. Sound great, Rudy. Sound great.
And you can see my screen okay as well?
Yes, we can.
Yep.
Okay,
yep,
great. So, thanks for the introduction, David. Thanks, Douglas, for the lesson on how to choose a mining company. I agree with your assessment wholeheartedly. And as you know, you and I have known each other for a number of years, and glad to still see you as a supporter. So Seabridge. Seabridge is a company that I started 20 years ago with a number of colleagues. When we started the company in October of 1999, our thesis was that the price of gold would go substantially higher. Back then, gold was trading at about $260 an ounce. Obviously, at $1,600 an ounce, our forecast has come true. But we still believe that the best is yet in front of us. We believe that the gold price will not only go through its all-time high of $1,900, perhaps in the next several months, but beyond that, we'll go to levels I think that will surprise a lot of people. And our thesis on gold is based on four facts. One is that the world has far too much debt. We had a debt crisis in 2008, and the debt is only up 60% globally since that time. We believe that a coming recession will pop the credit bubble. Perhaps the coronavirus is finally the canary in the coal mine that's leading towards a recession, and that when the credit bubble is popped, that we will have defaults, unemployment, and huge government deficits. Central banks will do what they always do. Instead of letting the debt default, they're going to go out and try to prevent the collapse by aggressive monetization. And as a result of that, currencies will fall hard and gold will soar. So why Seabridge? If you look at Seabridge today, we've now amassed one of the largest reserves and resources bases in gold and copper on the planet. Between KSM and Courageous Lake, we have 45 million ounces of proven and probable gold reserves and over 10 billion pounds of copper. and that's contained within an overall resource of 122 million ounces of gold and 46 billion pounds of copper. After 21 years now in the business, Seabridge, we only have 63 million shares outstanding. I would say that's another thing to take a look at when you look at investing in gold companies. How quick do they dilute their shareholders, and how do they offset that dilution with adding value? We offset dilution by growing ounces per share. So we're willing to suffer dilution if we can increase the ounces on a per share basis as a result of the dollars we raise. A low valuation, today we're trading at less than $20 per reserve ounce. Political risk is real, as Douglas pointed out. I've had mines in my career expropriated by third world countries. It's real, it happens, and not just through expropriation, but also through creeping increase in taxes and royalties and outright demand for ownership interest in projects. As a result of my experiences, Seabridge is focused exclusively on North America. All of our reserves are in Canada, and not only are they in Canada, KSM, which is a large project, has now received its permits and is now shovel ready. What we've done best over the past 20 years is finding ounces. Seabridge has found more ounces than any other company on the planet over the past 2 decades, and that includes Barrick, Newmont, Gold Corp, or any of the seniors. Over the past several years, we have found over 100 million ounces of gold and well above 40 billion pounds of copper. We also take advantage of down markets. We started Seabridge in the very bottom of the gold market in 1999 when valuations were almost non-existent. Recently, we took advantage of a down market again in 2015, going out and buying 2 new projects that I'll touch on briefly today. This next slide, entitled Share Dilution Matters, I think really tells our story best. As I mentioned, everything we do is to try and increase our shareholders' optionality and leverage the gold price by growing ounces per share. If you look at how this has transpired over the past 2 decades, by the end of 2018, with 62 million shares outstanding and 122 million ounces of gold, we provide our shareholders right about 2 ounces of gold resources in the ground per common share. And that's 10 times more gold ownership than any other public company out there. When we started Seabridge, the concept was optionality and leverage the gold price. That remains true today. But if you look at our track record over the past 20 years, we have delivered on that concept of outpacing the gold price and other gold equities. Over the past 20 years now, we've outperformed the gold price by about 5 to 1. Meaning that every 10% increase in the gold price on average has resulted in more than a 50% increase in our share price. If you believe that gold prices are going higher, or you want to have gold ownership within a portfolio to provide insurance, Seabridge provides the best returns that you can imagine in a rising gold market. I'm going to touch briefly on each of our assets and spend most of the time on KSM. KSM is an asset we acquired in June of 2000 from Placer Dome. We bought this asset for $200,000. Placer Dome had spent $25 million on this project prior to our acquisition. If you fast forward to today, KSM has now become the largest undeveloped gold-copper project in the world as measured by gold reserves. It's also located in British Columbia in a very exciting area now that's starting to gain the attention of the major mining companies. Just to the north of us, Newmont came in recently buying a 50% interest in Galore Creek. And more recent than that, Newcrest, a very large Australian company, came in and bought a 70% interest in the Red Chris mine. At KSM now, we've spent over $300 million over the past 15 years, taking the project not only through exploration and discovery, but also through engineering, pre-feasibility studies, and permitting. This project now is fully permitted with the environmental certificates in hand, both federally and provincially, and we have the support of all the Indigenous people in and around the project, as well as impact benefit agreements in place with the 2 key ones, the Niska Nation and Tahltan Nation. Another great benefit to us over the past 2 decades is what the government and others have spent on infrastructure that we do not need to spend now. Probably the most important aspect is generating and delivering power to the KSM project. Over the past decade, the governments of British Columbia and federal government of Canada has spent over $700 million extending the power grid right next to KSM. We'll be able to buy power off the grid for about 5 cents per kilowatt hour, some of the cheapest power in the world. And we've now secured through contract arrangements with BC Hydro 250 megawatts of power from that line. In addition, just to the south of us in the town of Stewart, that'll be accessible by road from the project. There's 2 new port facilities that have been built recently that will allow us to bring supplies in and concentrate out. And last but not least is the road network that's been developed now with a major highway just to the east of KSM, and also our next door neighbor Pretium building a road to the doorsteps of KSM where we have joint access agreements in place with Pretium. At KSM, we're blessed with a large porphyry system. Right now, we have identified and drilled 4 deposits. Within these 4 deposits, starting from Iron Cap to the north, Mitchell, Sulphurets, and Kerr down south, we've accumulated and identified 7.5 billion tons of total resources that contain 106 million ounces of gold and about 46 billion pounds of copper. This gives us a lot of flexibility in terms of how we plan to mine this project. Right now, under our environmental assessment approvals, we have approved capacity for tailings of about 2.4 billion tons, which essentially captures about 1/3 of our resource. And we've been playing over the past couple of years in different mine plans to unlock value to maximize net present values and internal rates of returns and payback periods. On a reserve basis, we updated our pre-feasibility study in 2016 that defined reserves of 39 million ounces of gold and just over 10 billion pounds of copper, showing a project that would have an all-in cost of production, including the upfront capital, sustaining capital, closure costs, and operating costs of about $670 per ounce. What that did not yet include, however, are the 2 new zones we've added over the past several years, Deep Kerr, which is now another 2 billion tons available to us, and also the Iron Cap zone, our most recent discovery. We now see the opportunity to selectively mine from these 4 deposits to drive economics. We did an updated mine plan in 2016 to capture the down dip extension of the Kerr deposit in a block cave scenario, and that updated mine plan increased the metal content from 38 million ounces of gold to 40 million ounces of gold. But more importantly, because of the higher copper grades, we went from just over 10 billion pounds of copper to nearly 17 billion pounds of copper in the same 2.4 billion tons of resources. This will be a big mine. It'll be a long mine. Our mine plan right now is in excess of 50 years. And again, that's capturing only about 1/3 of our overall resource. As we discussed this project with the indigenous groups, what they really like about this project, it's not a one and done, build a mine and you're out of there in 15 to 20 years like most gold mines are. This will be a multi-generational project that'll generate jobs, opportunities, and economic benefits to the local indigenous groups, probably for well beyond 100 years. In the updated pre-feasibility study, we showed the impact of this higher grade material in a PEA model, whereby we were able to show a reduction in the total cost of production from $670 from our reserve model down to $360 by including the Deep Kerr deposit. As you would expect, this drop in total cost by over $300 an ounce improved the economics, improved the internal rates of return, and lowered the payback period slightly. We're now in the process of doing one more iteration. Since 2016, we have found another 2 billion tons at the Iron Cap deposit that has some of the best grades to date, actually better than Deep Kerr. And by April of this year, we're going to have an updated pre-feasibility study and an embedded mine plan to show the improvements we expect from this project as a result of incorporating the lower Iron Cap zone. And why are we excited about that? If you look at the Iron Cap zone, within the large 2 billion ton resource, you can see all of the purples and the reds in this cross section. That's what our updated mine plan is focusing on. And if you look at what type of grades that can deliver in a smaller footprint, but still capturing 800 million tons of material, you're looking at about 0.7 grams per ton gold, which is about 40% higher than our reserve grade, and pushing 0.4% copper, which is more than double our copper reserve grade. So stay tuned. We'll have an updated mine plan and updated projected economics shortly, probably sometime in April of this year. We're not a single asset company. We have other projects, 3 other projects, the most advanced of which is Courageous Lake, a project we acquired from Newmont and Total in 2002. We finished a pre-feasibility study at Courageous Lake in 2012 that showed a project that could capture 6.5 million ounces of reserves. At that time, the US dollar Canadian dollar exchange rate was essentially at par. A strong Canadian dollar is not good for Canadian assets. And as you can see here, the economics on the base case at Courageous Lake was not that great, only a 7% return and a payback period of 11 years against a 15-year mine life. Obviously, nobody would build a mine with those base case economics. However, if you change just the gold price and the exchange rate to more up-to-date numbers, you can see a tremendous improvement in the economics of Courageous Lake, with the NPV growing by about $1.5 billion and the internal rate of return almost tripling. We are now focusing again back at Courageous Lake, doing additional work there, not only in terms of changing the economics as a result of changing exchange rates and gold price. We're also now looking, is there a smaller, more robust, easier to build project than the larger project that this pre-feasibility study is on? And we did a fair bit of work on that last year, and we've convinced ourselves that indeed there is. As I mentioned, we also took advantage of the down market in 2015, going out and looking to buy new projects to kind of reload in terms of where we got to from 1999 to 2015. One of those projects we acquired is a project called Iskit. We bought a public company called Snip Gold. We issued 700,000 shares to buy this company. On the front end, we got 2.2 million ounces of measured and indicated gold resources at the Bronson Slope prospect. We believe that Snip Gold and Iskit has the same opportunities that we saw at KSM when we bought KSM in 1999 from Placer Dome. It is a large gold copper porphyry system. It has the same rocks and essentially the same timeline when these deposits were developed, tens of millions of years ago. We're now focusing for the first time a large program this year on looking for a big gold copper porphyry that we've now identified through geophysics and also some limited drilling. So stay tuned on that for 2020. The other acquisition we did is one that actually excites me perhaps even more than Iskit, and that's buying a large land package in northern Nevada from John Paulson. The land package we purchased sits on the intersection of the three most prolific gold belts in Nevada, the Getchell Trend, and the Northern Nevada Rift Trend, and the Carlin Trend. Collectively, these three trends have hundreds and hundreds of millions of ounces of gold, a lot of which has been mined already. But more importantly, specific to Snowstorm, just to the south of us, we have two of the biggest mines in the Newmont Barrick Nevada joint venture, Twin Creeks and Turquoise Ridge. We believe we have the chance to find a Turquoise Ridge, Twin Creek style deposit at Snowstorm. Last year, we went in with our first drill program to confirm that we have the right rocks, the right alteration, and the right structures. This year, we'll be going back with a follower program to try and continue to hone in and vector in towards those types of deposits. So driving value, I think you should ask any CEO, okay, if I own your stock, what's going to drive value going forward? Why should I own your stock? Well, I think in the case of Seabridge, it's four-pronged. I think you look at what we've done in terms of the assets we purchased, we've advanced them, we're in safe jurisdictions, then we're able to permit projects. Next would be our ability to find ounces. As I mentioned, we have found more gold over the past 20 years than any gold company on the planet, and that includes all the majors. We know that the most important thing that we can do to drive value in the short to medium term for our shareholders is getting a joint venture done on KSM. We're now at the point where we've done essentially all the work we would like to do. The updated study in April, I think, will define an even more robust project than exists there today. And we now continue to dialogue with major mining companies to bring in a partner that's willing to go all the way, commit the capital to build the mine, and start to generate a gold flow from this project. Our goal in a joint venture is to hang on to a meaningful interest in the project while minimizing our capital contribution. Once KSM is built and up and running, at today's metal prices, it'll generate about $1.5 billion of cash flow a year for the next 50 years. hanging on to a meaningful piece of that project obviously would do a lot to our valuation in the marketplace. And then last but not least is the gold price. If you do believe that gold is going higher, Seabridge is a stock to own. It represents over 90% of my net worth. I'm not a seller here. I do believe that gold is going to go a lot higher. And if you look at our historic performance relative to the gold price, our shares will go up with the gold price and then some. So just to kind of wrap things together, we are dual listed both on the New York Stock Exchange and the Toronto Stock Exchange, although most of our volume does occur on the New York Stock Exchange. We are a part of a number of the gold ETFs and indices, including the GDXJ, low share count, no debt, workable balance sheet, strong insider ownership. I think that's another question that maybe Douglas didn't mention. How much skin in the game that was actually bought and paid for with real dollars to insiders own. In the case of Seabridge, it's well above 30% of the common shares of the company. And then finally, we also have some financial and strategic investors, including a lot of the better name known in the space, and including also Royal Gold as a strategic investor in Seabridge. So David, I think that covers off what I'd like to present today, but as always, I'm happy to spend as much time to answer any questions.
Thank you, Rudy. Great, well presented as always. We're going to start. We'll turn it back to Doug Loud, who gave us the introduction. Doug, question today.
Well, you already have all your permits, so I can't ask my favorite question. But I'm intrigued by snowstorm and ISCIT as well. But in the case of snowstorm, what kind of rock is it, and are you going to get it processed at Newmont's plants, or how are you going to get it processed?
Yeah, I think what we're looking for, Douglas, are basically replicas of Twin Creeks and Turquoise Ridge. Turquoise Ridge, I think, still has 9 million ounces of reserves left at 13 grams per ton. That's our goal at Snowstorm. And obviously, if we find something like that, the infrastructure at Barrick and Newmont's joint venture there, specifically the operations at Twin Creeks and Turquoise Ridge, would obviously lend itself well as perhaps a joint venture, or perhaps even at the right price, an outright sale of whatever we find at Snowstorm to that joint venture. You know, one of the nice things about Nevada is there's a lot of infrastructure already in place with a number of big mines just to the south of us. So if we are successful in finding something there, we think that realizing value very quickly through a sale or a joint venture with a major mining company is definitely doable.
That's great. Thanks.
You're welcome.
Thanks, Doug. We're going to turn to Brad Fowler. Brad, question today for Rudy? Brad?
No question today. Thank you.
Thanks for being on the call, Brad. We'll turn to Chesley Morton. Chesley?
Thank you, David. With regard to KSM, with the current metal prices, it's moved up. Are we at a tipping point now, or does that require $1,800 gold, $3 copper, or both?
No, I think if you look at our project, even at today's metal prices, it's quite nice and quite robust in terms of the returns that you can experience on this, the net present values and all that. There's no question, though, that that a higher copper price would be helpful. You know, when you look at the potential partners that can take on a project like KSM, in the gold space, there's really only three. There would be Newmont, Barrick, or Newcrest. But in the copper space, you have a bit more. You have the Antofagastas, you have the Freeports, you have the BHPs, you have the Rio Tintos, and a few others. So having a higher copper price, I think, would be helpful in our ability to transact on the terms we want. And I should point out to you that we actually have turned down a number of proposals over the past several years, and that they didn't reach in terms of what we were looking for. I think for the gold companies right now, the wind is at their back. Gold above $1,600 is a very different environment than it was 5 years ago. And more important to the gold companies is they've also done a good job in terms of cleaning up their balance sheets, paying down debt from their previous mistakes on overpaying for assets, and they're also all running out of reserves. The reserve life of the major gold companies today is probably about 10 years. They need new projects, and KSM would fit any one of them quite nicely. But there's no doubt that a higher copper price would be helpful. I wouldn't be surprised to see actually a deal that we do on this which might be bringing in a gold company and a copper company together in some sort of syndicate structure, as well as perhaps bringing in a financial player that would actually fund construction of the project to get the offtake from the copper concentrate that will be flowing for more than 50 years. So hope that answers your question.
Yes, and I like to hear the details of deal making. It's always interesting. You mentioned joint venture earlier. Are you locked into the idea of either that syndicate that you talked about or a carried interest in a JV, or would you settle for a royalty?
Yeah, look, I think anything's on the table. We're flexible. I think if you look at our deal-making skills over the past 20 years, I think we can get creative when needed to drive value. We're not set in our path in terms of one structure only. Anything that can drive value to our shareholders that we deem as appropriate, we can move towards. Another potential structure might be that we just basically keep a stream that we don't have to pay for up front, where we get to buy the physical gold or a portion of the physical gold from the project on obviously a less than market price. So yeah, we're open to all different ideas, and we have discussed all different ideas over the past. We just haven't gotten to the point where we can say yes.
Thank you. It was a great presentation.
Thank you.
Thank you, Chesley. Always enjoy your participation. We're going to go to Elliot Glazer. Elliot, do you have a question today for Rudy? Okay, we'll pass. We'll turn to Howie Flanker. Howie, question today?
Hi, Rudy.
Hi, Howie.
About 6 months ago, you and I went through the exercise of copper at 220 and gold around 1500. I can't remember what number we specifically tabulated, but I think we came out with a return of 12 to 15% even then, near the bottom of that cycle. Does that ring a bell?
It does.
Yeah.
So when you look at it today, Howie, if you look at where we are today with $1,600 gold and $2.60 copper, we're probably looking at just in the 2016 PEA, we're probably looking at an IRR in excess of 17%. And I think when we bring in the iron cap zone and update the mine plan once again, we're probably pushing towards 20% internal rate of return. And as we all know, that is a important number to a lot of the big gold companies out there that would then view this as a tier one asset.
And now that we've passed 1600, I surmise that corporate managers are going to become more are hungrier about acquisitions. Have people begun to call you more lately than before, or not really?
Yes, they have. And to be honest, Howie, there's a lot of people that call that we're not interested in doing a deal with.
Right.
So the technical wherewithal to build a mine the size of KSM. So, we continue to focus on the less than 10 companies that we see out there that would be suitable partners based on technical capabilities and financial capabilities.
Prospective Chinese buyers have a bad case of the flu, but they also have a technical problem.
And then, quite honestly, they're not the kind of partner we'd like to partner this project up with.
No, they don't operate cleanly. All right, thanks.
But with that said, Howie, they could be there for some of the financial portion if they want to provide capital. Absolutely.
They could probably be part of a sort of tripartite deal. They plus another plus you.
Correct.
All right, thanks.
You're welcome.
Thanks, Howie. Good to have Jerry Needleman on the line. Jerry, question today for Rudy?
Hey. Yeah, thanks. Morning. How you doing, Rudy?
I'm well, Jerry. Yourself?
I can't complain, my friend. Couple of quick questions here. The current short interest right now in Seabridge?
I think it's just over 9 million shares between the NYSE and the Toronto Stock Exchange, so it still is about a little more than 20% of our float. And then the premise, I think, and the investment thesis of the shorts is that we're not going to get a deal done. We've been talking about a deal for many years now. They failed to recognize that we actually have turned down deals. But I think when we get a deal done, we're going to see not only new eyes on the story because of having a partner in to develop the asset, but also a very, very fun short covering rally if you're long the stock.
Right. A couple comments on Paramount Gold here, which I know you're chairman of here, and you made a couple of new changes there at the company. Any quick comments there?
Happy to have one comment on that. I think the person we brought in, Rachel Goldman, as the CEO, will be an effective face of the company to bring new investors in. As you know, Paramount, like Seabridge, is a very tightly held stock. A lot of insider ownership, including Seabridge, as well as FCMI, Albert Friedberg. But I think what the company has been missing over the past few years is really an effective person out there to pound the table and bring new shareholders in. And I think Rachel will do a great job on that.
And one last question. Any comments on your neighbor Pretium here? You should probably go in there as CEO with that opening. You got more than you can handle now, probably. But one of the guiding principles, as you know, Jerry, from day one, is we will not build mines. We'll bring partners in to develop mines or sell projects off at the right price to operators. Building and operating a mine is tough, and I think, and this is the first mine that Pretium has ever tried to build, and even prior to that at Silver Standard, they did not have a lot of success in building mines. It's just a hard business to be in, I'm glad I don't need to go out with quarterly forecasts on grade and ounces versus the bigger picture on why do you own a gold stock, because you want leverage to the gold price, and that's what we provide. Our industry is hell-bent on turning gold into cash, and most of them not making any money on it. Or if you look over the long term, horrible returns on investment. Our view is turn cash into gold by doing equity financings and using the proceeds from that to grow ounces per share. And I think that's why it served our shareholders well over the past 2 decades, and we're going to continue on that. Thanks, Rudy. Have a great day.
You too.
Thank you, Jerry. We'll turn to John Boland. John, do you have a question today for Rudy?
I don't have a question. Great presentation. I always, listening to you, think I should own 3 times as much as I own of this. But thank you.
Well, thanks.
Thank you, John. Always good to have you on the calls. We're going to go to Larry Parks. Larry, do you have a question today?
Very nice job again, as always, Rudy. Thank you.
Thanks, Larry.
Thanks for being on the call, Larry. We'll turn to Nick Polidris. Nick, do you have a question today?
Yeah, I just got one question. My question's on Pretium Rancher, kind of. How much have you spent on KSM since inception?
Probably about $300 million Canadian. So, just over $200 million US.
Okay, thank you. Great presentation.
Thank you.
Thank you. We'll turn to Paul Fawcett. Paul, do you have a question today for Rudy?
Yes, most of the question I have is also related to Pretium. I just, as you know, Pretium has gone through a couple of quarters of ups and downs and disappointments. And can you tell me the difference, or tell us the difference, and the similarities and the differences of your properties and Pretium's?
Sure. Completely apples to oranges, Paul. We're dealing with a large porphyry system where we have 4 deposits where grade consistency is very straight line over each of the 4 deposits. So, which is great. So you don't need to have tightly spaced drilling to define a reserve or a resource because you have tremendous consistency over large distances. Pretium is mining a big vein system where you have a lot of variability in grade. You can be in a drill hole that hits thousands of grams of gold per ton, and 5 feet away from that, there's nothing there. And you have to predict the grade between drill holes. So the variography is extremely high compared to what we have at KSM. Look at KSM, they're akin to the big porphyry gold copper gold deposits mined in Chile, where you don't have grade issues. The grade is fairly consistent over life of mine, compared to these underground mines that have large variability where you really don't know what you have there until you actually mine it out.
Good answer. Thank you.
You're welcome.
Thank you, Paul. And Rudy, I have a question from a generalist in the...
I'm sorry, we do have a couple of questions from the floor we could go through.
Yeah, okay. I'll ask the first one and then I'll turn it over to you, Scott.
Great.
Okay, so we have a generalist, Rudy. They're just they wonder in relation to buying Seabridge and just the biggest concern is slowing GDP and potentially contracting economies, and kind of how that an investment in gold might be could have a significant effect on it.
Well, I think in that environment, gold will do well. Gold does not do well when you're in a Goldilocks environment where stocks and bonds and all those other financial assets are making new all-time highs every day. I think if we are going to see a recession in front of us or a global contraction, you're going to see the stock market get hit hard. One might argue that the valuations in the stock market now already are at record levels. And if you see a contraction, stocks will get hit hard, and that's typically when gold does well. So, if I bring it on, that would be great for not only the gold, but also for all gold equities.
Thank you, Rudy. We'll turn to Scott, who has some questions from the group as well.
Yeah, a couple of people asking questions about your upcoming and current plans for the snowstorm project in Nevada.
So this year we probably have a $4 to $5 million program lined out. Last year we spent about $3 million at snowstorm, confirming that we had the right rocks, the right alteration, and the right structures that led to deposits like Getchell and Turquoise Ridge and Twin Creeks. This year we'll be just vectoring towards where we think the mineralization or the best chances are. When we took this project on, we recognized that this is not a one and done. The expectation that you make a quick discovery there is quite low. Our belief from day one is that this is probably a 5-year process here where you're spending upwards of $5 million a year to vector into a very high-grade deposit. Recognize that at Snowstorm, we're dealing with hundreds of meters of tertiary cover. We need to get through that before we get into the rocks of interest. And the size of these deposits are quite small. One advantage I think we have is when Getchell Gold was purchased by Placer Dome in, I think it was 1996 or 1997, there was only 1 million ounces of gold there, known at the Getchell Gold underground mine. Placer Dome actually bought that company for over $1 billion. They paid over $1,000 per ounce in the ground at the time, with the belief that there's 20 to 30 million ounces there, which they've now proved right. The person that did that deal for Placer Dome was Eliseo Gonzalez Uria, and he saw the upside there. He saw the potential. He saw the rocks. He saw what it could become. Eliseo has been with Seabridge from day one. He's one of our key directors that oversees a lot of the exploration activities and questioning why we're doing the work. And Eliseo, as we did the due diligence on Snowstorm over a 2-year period before we bought it, came to the conclusion that the same potential he saw at Getchell back in 1997 exists at Snowstorm. So, it's going to be a few more years, I think, till we actually can do this project justice, but the prize on this thing is over $1 billion of value to our shareholders if we have it right.
Wonderful.
Great.
Scott, other question?
I think one last one that.
Wonderful.
Yeah, I just have one last one, and that would be, in general, what do you think are the biggest risks and concerns in the upcoming year?
Always metal prices. If gold doesn't maintain its price or gets hit hard, or copper doesn't start to respond to the true supply and demand fundamentals of the copper market, it's more difficult for us to get a deal done. So it's always metal prices. If you look at our historic share price performance in a rising metal price environment, our shares excel. In a down market like from 2011 to 2015, look out below. I mean, as gold went from 1,900 down to 1,000, our share price went from the high 30s down to single digits. So our biggest risk remains metal prices.
Thank you.
Thanks for your question, Scott. Rudy, before I turn back to you for closing remarks, I just want to encourage our audience, even after the webinar, if you have questions, you can engage with us and we'll get them answered, or when you're watching the replay as well. Feel free to send us your questions. Rudy, over to you for closing remarks.
Thanks, guys. Thanks, David. Always appreciate this format. It's a lot easier for me to do this than to get on a plane and go to 20 cities, which I think we probably have covered in this call today. But also, if you want a follow-up from me, please reach out with an email. My email address is Rudy, R-U-D-I, @seabridgegold.net. And I look forward to the next call. So thanks, guys.
Thank you, Rudy, as always, for a great presentation. I want to thank everyone for joining us this morning, and I want to wish you a very pleasant day. Rudy, I'm going to give you a quick call.
Okay.